I'll do an introduction. I'm on. You on? Can you hear us? Yep, you can hear us. You probably need to get a little higher. All right, let's get comfortable here. All right. How's it going, guys? I knew I would try to get up here at one point. You're still pretty quiet. Test, test, test. This might be hot. I'm gonna try that.
How's that? Oh,
Yep.
There we go. Okay,
That works.
I'll use the mic. Yeah, so Michael and I are going to have a debate.
Well,
And it's not really a debate. So
yeah.
this came about last night. I was sitting over at the booth, and Michael was talking to, I think, David. And I asked him, what do you think about Maripool pulling OFAC? It was just an instant question because he's got a lot of information. And I think we talked for about an hour and a half.
Yep, going back,
About it.
back and forth on both sides. So for
So we kind of want to unpack our conversation. So there isn't, this is right or this is wrong from both of our points of view. This isn't a debate about what's good or bad. This is just, something that a mining pool tried and then decided for whatever reason not to do. And there's a lot of discussion in why they tried to do it, what they're trying to do, why,
I'm good.
it was the reaction that came to it. Why they U-turned a bit, good or bad, and we just talked about it for a long time, and thought that a lot of people would find it interesting.
Yep. So, I mean, I think we would first start. First, I'll introduce myself real quick because nobody's seen me yet on stage. So I'm Mike Carter from Bitsby Trippin, one of the oldest mining channels on YouTube. I created a mining YouTube channel to try to, get the grassroots kind of movement of folks into crypto mining specifically in 2013. So it's pretty early in the game. I've been in the space since late 2010, 2011 mining, participating on Bitcoin Talk, writing, I do regret that I never tried to reach out to Satoshi back in those days before he left, but, was watching the debates, the early debates on Bitcoin, and just got very interested in the mining from the participation in mining. So I made a channel around it, and I've since covered not just Bitcoin, I've covered a lot of the other different proof of work focused currencies, and I get into now explaining or trying to explain decentralized finance when it comes to some of the architecture. I usually rest everything into a observe and report kind of standpoint. I'm not trying to push or shill anything directly on you. I just try to explain it, from an architecture standpoint, how it's working, and then allow people to do kind of their own research if they want to go into any of those different types of topics. But I have a lot of interaction in the space, kind of in the back side. I mean, short of my YouTube channel, I also work for General Dynamics and work to help educate some of our government leaders, from FinCEN to CFTC, a lot of that on just from a technical standpoint. The ethical boundary I leave with that is I will not try to influence any kind of legislative decision making, but I will talk about how something mechanically works. So specific to like Taproot, or so specific to like the OFAC blocks, like what does this mean mechanically if you're omitting or choose to omit particular transactions and that sort of thing. So I think a lot of the conversation that we were having yesterday was around, there's the ethos of what Bitcoin is from a decentralized network, and then there's certain, if you're going to start building legislation around what to do with, the protocol itself, or from a adherence on, liquidity centers, KYC, that kind of stuff. Where does the friction that we all have to, be part of if you're doing heavy liquidity or movement, where does that sit? So I don't know if you want to open up real quick, just for the folks that don't know what the OFAC, what is the OFAC?
My interest in this is from Blockseer, which is a company we bought in San Francisco a few years ago that does explore. We do data analytics. So we look at transactions, and we label and track them. And like I said earlier today, it's a lot like Chainalysis or Elliptic and CipherTrace. So we have this sort of same technology. So, we're interested in and it's not just criminal elements, but we're just interested in different elements and different transactions, and using that data, and we gather it, and we label it, and we store it, and we sell licenses to our software for people to use. So, when the OFAC thing came out, it's something we well know. And in my background, when I was in the accounting firms a long time ago, I worked in forensics, looking at bad actors and how they moved money around and things they used. Back then, there wasn't a whole lot of Bitcoin going on, but over the years, it's grown. OFAC is basically the acronym. What is it? Office of Foreign
Accounting
Control. I actually don't even
Yes,
remember
I think you actually had it.
So, but it's from the Department of Treasury, and basically within the U.S. government, they monitor and sanction people or states based on government policy and investigations, just different things that are happening in different parts of the government. And so you can be a person, you can be a country, you can be whatever it is. And there's a lot of different people that are sort of sanctioned, or countries that are sanctioned for the way they behave to the U.S. or in general. And the U.S. government takes a position on that. And so why is it important? Well, in OFAC, they started publishing a list of wallets that the U.S. government has said, these are bad actors, you shouldn't do any business with these people. Or at least these wallets. I'm not saying they name people, but they name wallets and say you shouldn't do any transactions with them. So if you were a bank, you wouldn't be allowed to transact with anybody that's on the OFAC list. So there's a compliance department. So if I wanted to wire $1 million to an organization or a person or a name or a country or whatever it may be that's on that OFAC list, the bank would stop it and say, no, you're not allowed to, and we're not allowed to help you wire that money there. So we can't let you transact. We're not allowed under the governmental rules that we have to follow in our regulation. And so the OFAC thing, it's not a huge list, but there's a list, and somebody in the U.S. government has worked on this and said, these are wallets that we have identified, are part of our sanctions, and nobody that is an American company following our rules and regulations is allowed to transact with these wallets. And so, when we talk about Marathon and Marapool, one of the ideas that they had when they were putting their pool together, and as a public company, they were really interested in what I talked about before, was this sort of reporting standard they need for their auditors of getting data that they can verify and understand. But one piece in there that they are aware of is that in transactions that happen on the Bitcoin blockchain, these wallet addresses are in there. So as you build blocks, you build them by transaction fees, and in there you'll have these blacklisted wallets where technically you shouldn't be doing business with them. And so their idea was, well, we can filter those wallets out. We can just skip them and go to the next transaction. And has very little impact on us financially. We might lose a few dollars in transaction fees, but for us just to skip these wallets and still fill a block up, what's the issue? We can just do that, and then we won't have any potential problems in our country with our regulators if they go and take a look at our business and our pool. They'll go, okay, you guys aren't doing any kind of bad business. You KYC'd all your miners, they're all yours. You know where they all are, and when you build a block, you're doing building with all wallets that we're okay with. We have no issue with any of the wallets. And so they thought that was a good thing and that they should do that. And so that's what they went off and did. They filtered blocks and they knew where all their miners were. And their goal was to make sort of a regulatory and compliant pool that, from being a U.S. company, and a large market cap U.S. company, would be good for them and a good thing to do. And they went and told the world that. And that's when I asked them, so what do you think about it? And they had a lot of negative reaction. And a lot of it was censorship. And I was saying, well, I don't understand the censorship part of it, because just because Marapool decided to filter out a transaction that they shouldn't do business with, at least they believe they shouldn't do business with, that same transaction will go to the next pool operator out there, and they'll grab that transaction. So it's not really being censored so much as it's not going to be in a block that pool does. And so what's the problem? So you're still gonna, that blacklisted wallet will still get picked up by a pool, and it will still go into a block, and that transaction will happen. It just won't happen on that pool.
Yeah, so we were going back and forth because I was more kind of on the line of like, well, you look at a decentralized network and the premise of what Bitcoin is, and you look at it like, I look at it from a mechanical standpoint that it's like just like phone lines, right? And like you're not putting regulation on the transmission of a phone line. You may do it at the end state of it. So when you look at the architecture that's out there from regards to KYC, most of that's at the liquidity center when you're exchanging from one currency to another. That's why a lot of this KYC is coming out there. And even in the DeFi markets, as things start to move between different addresses and wallets, at some point when there's a value exchange, there's still some level of KYC to get capital, large capital. So when I look at should pools do this and affect it at the network layer that, or should it rest where the friction sets, where there's already friction when it comes to KYC? I was on the side of it should set where the regulation is normally setting at the liquidity centers, right? Not really adjusting anything with protocol. First off, you're not going to adjust anything with protocol. It's more of a choice that one individual pool makes. And what they would be giving up is the opportunity cost of whatever that transaction fee was for that particular transaction. But I understand both sides of the piece there. When you look at large capital investors, when they're looking at clean energy, they're looking at OFAC compliancy, that sort of thing, where you have banks that, and all that OFAC compliancy from like a banking standpoint is they can freeze funds, right? And then those funds get held into an interest-bearing account until somebody does some kind of legislative or adjudicate, was this seizure correct? Was this a false flag? Do we have to send it back to people? It's just kind of a hold. From a standpoint from the Bitcoin blockchain, it would be just you choose not to process that transaction. The Bitcoin community obviously said, well, that's censorship. It should be order list based on price. That's the way it's always been on almost every blockchain. You take the top one in, whatever the mempool is, people bid on that price to be the top of the thing, and you process as order set. I think I understand and would agree to the point that if a company chooses, if it's a public company, chooses to take less revenue because they want to become compliant, that's healthy for the ecosystem if you're bringing in investors that have to comply with that. And that's what's kind of lost in that discussion because people immediately go, this is censorship, this isn't Bitcoin. The fact that those transactions are going to get picked up, it isn't changing the protocol level. It's not asking for a hard fork. It's not asking for a soft fork. It's just saying a company will make a choice to choose to become more compliant, to bring in other dollars into the ecosystem because they have awareness that, hey, I can't touch this because you are indirectly processing transactions from something that's on a blacklist, right? So if you can form around that, and I watched the most recent conversation that Pompanato had with Fred Thiel on this, with Marathon backing away from it, and was thinking, okay, they were going forward to the position, took a lot of pressure from this ecosystem saying, hey, you guys are censoring. But understanding that, I think it's just all in the delivery of why. And that's our discussion here. It is saying that if there's real capital on the table and they want to be compliant, they want to have exposure to Bitcoin, but they want to be the most compliant that they can because later on, people start to peel back this entire, capital investment side of it. While people right now are not paying additional for that color of money, as it were, we're not processing transactions from Iran or any kind of other state actor that's been flagged to not have those wallets move. You could have a pool that is operating in that space, and that's their choice, right? It's not an impact to Bitcoin's entire ecosystem. It's literally a choice. Like, we choose to receive less money. We will not take those transactions, even if they pay a higher fee, because we're trying to be compliant. And I think it's all on that messaging delivery.
Yeah, I think that a bit of that was lost. You had a lot of people that didn't like this because they thought there was a change or censorship. I think censorship is a bit of a strong word. I think every company or person is free to choose who they do business with. And I think there's actually a lot of U.S. legal precedent about the freedom of service and choice in giving service. And so, for Marathon or anybody to choose who they want to service, I want to service these wallets, but not these ones. I think they have that right, and if people don't like it, they have the right to choose what they want to do. But I also think that a lot of people weren't connecting this idea of why is Bitcoin, at that time, $60,000. What happened, and this is the whole idea of institutional money coming in. And so institutional money, when it comes in, there's rules to it. And so these big financial institutions that are investing and buying Bitcoin, the Mass Mutuals out there and all these big guys and the banks that support them, they're getting deeper and deeper into what is actually going on in the Bitcoin network. How is it actually operating? Custody is easy because we all understand custody, we all understand AML and KYC. There's just so much attention to it from a financial level that, that's the easy piece to look at. But they're peeling the layers back, and eventually they're going to be looking at the pool because they're going to want to understand everything in the compliance side. And in the pool, we know that there are blacklisted wallets transacting every day. They're in almost every block, not every block, but they're almost a transaction or two there that the U.S. government disagrees with. So if you're a bank, and I've had these conversations with banks, and this is happening, you cannot do business with Bitcoin. You just can't do it because you can't get those transactions out. So it's just like a bank right now cannot do business with anything on the OFAC list. It gets flagged up, you can't do it, stop the transaction, hold it, just like you said, it's done, you're finished, right? And if you do something with it and you allow it to happen, that's when the regulator comes in, they start fining you and sanctioning you and making all your life very difficult in banks, and people start getting fired. And so the idea was, if you want Bitcoin to grow and be 65,000, 100,000, 200,000, a million, you need to get it out to the masses. You need more usage. You need to get the financial institutions incentivized, and you need to bring the regulation that they understand and can work in to the Bitcoin ecosystem. And so by moving towards OFAC and saying, okay, let's just not transact with these guys, you're actually allowing financial institutions to start getting closer to Bitcoin, start understanding it better so they can start onboarding and giving this product out to their millions and millions of customers. And I think when Marathon, you turned on that, I think they've slowed that process down because the bank's still going, I can't do this stuff. Custody I get, but in between that, intermediate, I still don't quite get that piece yet. I still see risk there for us to be involved. And until I can remove all that risk from a compliance point of view, I don't really want to get into this too deeply. So I don't mind buying a few coins here and playing around with it, but I still have some big problems because I have to follow OFAC as a financial institution. Bitcoin miners don't. Public ones should probably because they kind of follow on a lot of the same rules, but they don't. So if you can't make the Bitcoin mining ecosystem work with the US financial system, it's going to be really hard to grow it. And this is kind of what we talked about. And I think that kind of was missed. A lot of people want Bitcoin to increase in value. I do, I'm a miner. I love it. Of course I want it to be worth more money. It's great for me and my shareholders. But it's hard to grow that unless you can get it to reach out more. And it has to grow and has to be adopted more to really grow so there's more demand for it. But you're going to limit that demand if you can't get it into the financial system. And so by moving away from OFAC, I think we stepped away from getting close to the financial system, which increases adoption. JP Morgan, Morgan Stanley, Goldman Sachs, these guys have massive client lists, massive amounts of money, and they can really push adoption of crypto out. But if they can't do it, if there's a compliance person and they're saying, hey, they haven't solved this issue for us, stay away from it, then we're stuck. And so this is why it was a long debate that we had about it last night.
Yeah, I was kind of bringing more first you got to understand where the ethos came from, and that part of this whole design was to get away from a lot of that infrastructure, right, of make it more transparent and make it to where you can't be doing crazy derivative trading. Organically what's going on in the ecosystem. So to influence replication of what's there is not the way it's supposed to be, right? That's not the point here. However, if the influence is not to try to change protocol content, if it's not trying to influence a soft fork or a hard fork on it, and it literally is an operating agreement effectively of some pools will be OFAC compliant, and those pools and those coins that those pools have give access to folks that need to have that level of compliance to attach in. That's an infusion of cash from that, effectively that part of the business. And I think this has been very common in the crypto space, being part of it for as long as I have and seeing it and covering it. the transition from like kind of the, as we've adopted more the tech stack, as Ethereum's shooken up some things when it comes to like what's possible from a decentralized DeFi kind of world. Like, how do you start to merge those two environments to allow liquidity centers to come in, be compliant? I mean, anybody in 2013, there was no KYC, right? It was like shapeshift, whatever, you could do anything. And we started seeing things start to collapse around that. We were all, I mean, I don't know how many people got rug pulled on a few things. I mean, I lost stuff on Cryptsy, BTCE, like anybody else that was out there, right? And it's like, that stuff's gone, right? Big Vern took almost all my Dogecoin, right? Like, still haven't got it, right? So like, as we get more infrastructure in place, more security, and then, the kind of debates I've had through the space with my friends, like, hey, I get it, but, you're never going to convince my parents in it, right? They're going to use these institutions. These institutions are not going to really come in with their capital until there's at least, a set of rails for them. As long as those rails are not trying to influence the core architecture, I think that's where we have those hard forks and big issues. But this is when you look at the OFAC architecture, right, it's a very federated and centralized control. They can freeze funds, you can't take it. This approach from a mining side is just an omission of transactions, right? It's not trying to change protocol. I think if it's talked to that light and understood from that understanding and saying, hey, if you want this infusion of cash from these participants that are going to be mostly custodial, that are going to infuse cash to help grow the ecosystem, not trying to change the protocol, but trying to be compliant, I think that's in the messaging, right? It's in the education, it's understanding the perspective of where that money's coming from and why it is, who it's connecting to, that sort of thing, I think is a better messaging play for that. But I think that you're still going to have a huge amount of resistance when it comes into any kind of protocol change stuff. And that's where we were kind of going back.
I understand the resistance. I've been doing this for a long time. I don't want to change. I think the system works great, but I also understand growth and market adoption. And if Bitcoin wants to grow into what we all, I believe, want it to be, or it's sort of like an international type of, I don't want to use the word currency, but store of value, where it's about acceptance. If I want my parents to one day have Bitcoin that they hold, they're not going to go and open up a wallet and get a Trezor. They're going to go to their bank and say, hey, can I have some Bitcoin in my account? So for getting that to happen and to get that penetration out there so that there's more users, you have to understand the rules they play in. And as we talked about, I couldn't see what we were doing to the Bitcoin protocol that was a bad thing compared to being able to get it out to the common market and get that penetration, that growth. And that's how I think we're really going to grow the value of Bitcoin.
Sheldon, I just add to your side of it. The Bitcoin network is capitalistic. It's capitalistic. I can't imagine anyone trying to tell me that my miners have to do something. Like, that's just my call. If I'm going to lose a little money because of it, that's my call. It could be just a made-up list of 10 wallets I don't want to serve.
You could pick all the wallets of the people you don't like. I'm not going to put you in my block.
That's why it's a capitalist market.
Yeah.
It's a global capitalist market. So some guys over here can't tell me that I can't process. I can or cannot. That's my choice. And
That's your right of service.
OFAC list, blacklist, that's fine. The market will determine if it works or not. If the OFAC list gets so big that there's no wallets and not on it, then you guys won't have to anymore. But if it's accepted by the market,
Correct.
it's accepted by the market.
Yeah, and I think that was part of the point too, that I think you were making, like, what, if they believe strongly, like, no, I don't want any censorship at all, they look at that as censorship, then there's other pools, right? And then that pools are not going to be that way. And it's kind of like where I kind of turned my, I guess, because I was pretty aggressive with you for a little bit. I was like, no, man, you ain't touching anything,
He said,
bro.
This is a stupid.
This is a stupid idea. This is a horrible idea. What's wrong with you? But as I started to understand more of, like, okay, from institutional investors that want to come in, and if that's their entry point from an OFAC compliant crypto, and then we all benefit from that organically, we're benefiting from that infusion of cash. They happen to be using that pool or not, right? Where I think the line is drawn is when it comes down to paying kind of like an earmark to try to get a change on the protocol level, and then starting to try to influence Blockstream and anybody else that has the keys to the main node core, and then you have this closed door agreements, those kind of things, that's all negative impact to the coin, right? This is a transparent, and it should remain to be transparent. If somebody chooses to behave in a particular way, they're just giving up, a revenue transaction at the end of the day there. If those revenue transactions get very high because more and more pools become compliant to that, then you're still gonna have some opportunists that are gonna be having pools that are in other countries that don't need to be OFAC compliant, and then they're just gonna be pulling in those transactions. And I think we were kind of going through data just to figure, what was lost in those few transactions out there was like $70 to $100, right? It wasn't a huge amount of revenue that was lost there, but they were, to be compliant, it could be millions of dollars that come into the system, right? So, yeah, again, if they choose, it's capitalism. They can choose to either partake as a miner where you're pointing to, you're like, no, I'm not going to go there, I'm going to go here now because I don't agree with that. And I don't see any other democratic way of approaching that than that, right? So,
yeah, I think maybe I think they were so down and far in their thinking of why this was good that on the communication side, they didn't sort of unpack it and explain what the end game was and why they were doing this. And so having the right to serve whoever they want is one thing, but the OFAC side of it is like, I think they were genuinely trying to get U.S. institutional investors and U.S. financial institutions interested in finding a path to adopt more. And I don't think this story's over. I think it's just beginning. I think it's going to continue. It's going to flare up and down. I'm sure that on our website, I'm going to be tweeted and hated for having this conversation because we've taken a lot of flack around this idea of intervention, and I don't really see it as government intervention so much as I see it as there are certain rules that society has that we have to follow. And part of that is, just regulation around crime and criminals and sanctions and things that, as a society, we're against. And, I don't think that, Bitcoin is pro-criminal or pro-governance, but definitely not pro-governance. But it's not that we're trying to, as Bitcoiners, we're trying to unlock mechanisms to help crime. We're just trying to run a normal business that we think is good for everyone, and we think everybody should adopt Bitcoin. And in doing that, if certain countries have rules that you have to follow, that's just the way it is.
Yeah, I think it all comes back down to the communication thing, and really unpack. I mean, the folks that were reaching out on channel and asking, hey, I don't even understand this, because I had linked the conversation that Pompanato had with Fred Thiel of Marathon and how they switched positions, and I said, this was an interesting breakdown of how the community kind of went against this, but it all comes back down to the communication. And if you're going to lean forward, like going without any regulatory environment telling you have to do this, but looking at it from a financial services side and saying, if I was to replicate this to bring the institutions in, if I was to try to get banks to let us open accounts, what am I missing here? Is it FINRA compliant? What's the stack of punch list that I need to hit to try to get some of these investors in? If one of those are OFAC compliant and then they're trying to lean forward with saying, I'm going to tag this block. Now, they could have went and they just did this. We had this conversation. They could have just been doing this and not tagging their blocks, right? And they're kind of like virtual signaling. I heard that last night. We were talking, somebody said that it was kind of a virtual signal saying, hey, we're doing this. Without any guidance, we're just going to do this because we think this is good. And part of that issue is people are going to look at that, well, you're being different. Why are you being different with this? And you're trying to focus the point. And people get lost in the fact that you're tagging the block and you're doing this. It should have came out, it was like, hey, here, we've sat down with folks, we sat down with banks, we sat down with investors. They can't touch it, or for whatever reason, they're not wanting to touch it. So we're going to do this thing. You guys don't have to do this, but we're going to do this thing to try to bring in fusion of cash. I understand it's going to look like it's censorship, but it's just us omitting certain wallets. It's only our pool. We're not trying to force that will on the rest of the system, but if we can get an infusion of cash from folks that now feel more comfortable with the space, there's different classifications of folks that will come into this space predicated on that. And if that was the messaging up front of saying why they're doing it, and here's this kind of, they don't have to talk amounts and who and all that kind of stuff, but as that infusion starts to come in, it's like, okay, maybe you'll get a couple more pools that do it, and then you're going to get a whole bunch of the pools. 80% of the network's not going to, they're going to like, yeah, whatever, those guys are doing that, and they're OFAC compliant, cool. But it's not a a push of will on the system to try to change something at a protocol level. I think that's where the balance is. And where regulation, where I know I try to work with and educate regulators, OCC, conversations I've had with them of understanding how the mechanisms work and where it sits in the stack and where the friction points already are, like when the liquidity centers like uphold, BlockFi, all these places where we already have to have KYC and AML, right? That's where that friction sits. And as things start to move to Lightning and we start talking layer 2 transactions, when you want to have high volumes of transactions, now you're already moving to a federated network that can have a set of rules or laws that they're complying with that's more in tune with crypto in general. Because that's where, from a OFAC compliant freezing of funds, if you have an illicit activity coming on Lightning channel, that sort of thing, you have a little more influence of control than trying to change layer 1, right? And that's where I think that discussion's set. And it's all about, again, communication, having it back and forth, listening to both sides of it. But if we do want to see a lot of capital come into the system from a diversification standpoint, at 3 to 5%, as all of us have heard, and everybody's talk about allocations. I mean, Kevin O'Leary's on now saying 3 to 5% on his company allocations. But the story, when you peel that back, Kevin O'Leary has a bank, right? So you're like, well, who are you doing banking services with? If you're doing this and you're taking DeFi and you're doing stuff with Ethereum and all this stuff, he literally made a bank to do this because he's like, I can't get any banks to do this, so I made a bank, right? And he has the capital to do that.
Exactly,
right?
and not everybody does.
And not everybody does.
But that's the whole point, is that, there's, you talk about friction. There's a lot of friction if you have to create a bank just so you can hold some Bitcoin. So, the point is that, if you want to bring more people in and more capital in and really grow Bitcoin adoption, you need to play with some of the rules that everybody else has to play with. And that's just, otherwise, then just don't do it. Regulation will come and do its thing, and it will not get the adoption that I would hope it would get, over the next few years. Because if the big players can't come in and bring their clients into it, it's going to be really hard to get my mom and dad to open an account and start buying and selling and trading Bitcoin if they can't do it through a financial institution they've been with for the last 50 years.
For sure.
So I think that's a lot of, what was in the back of their heads was like we were trying to start opening the gates a bit more so that we could really increase adoption of, the biggest sort of wealth areas that could bring in the most users.
Yeah.
So I'm not, like I say, I don't think the story's over. It could be. But I think it's kind of opened up this sort of Pandora's box where people are aware of it and are thinking about it.
Yep.
And there's another piece that's kind of missing. I talked a little bit about this in the morning about being a public company. And I talked about this auditor that's going to be at our place on Friday and it's going to be looking at stuff. If you're an auditing firm and you're auditing a public company, if you find that they're doing anything illegal, you have to report it. And so depending on the audit firm and what they look at, they could be looking at public companies going, oh, well, now we're aware that you guys could be doing illegal activities, whether or not your government knows about it, but we know about it. And so this becomes a real problem. And so a lot of people that aren't in the public company world don't really understand the rules that we have to play by to be a public company. And public companies have been really important, I think, in North America in growing crypto. I mean, Marathon raised $550 million of people's money in a regulated fashion. Have to follow the rules, have to disclose everything. If they're caught doing things wrong, and if their auditor finds them doing things wrong, they can shut that company down and damage it and hurt the industry overnight. And so it gets to, with the amount of money and capital that's going into public companies that are really leading the way in crypto mining in North America, it becomes a real issue of, are they doing things right and following the laws? And following those laws is really about protecting investor rights. And this is why you have third-party audits from these big accounting firms. They're just there to protect the rights of investors and make sure the management and the board are doing what they say they're supposed to be doing in a legal and compliant way. And so there's a whole kind of onion around this whole issue that, just to stand up and say, oh, that's censorship, these guys are doing the wrong thing. It's like, well, I get your point of view, but there's look at the company's point of view, look at how they're trying to grow this industry, look at the regulations they have to follow, look at their shareholders, look at their auditor. There's a whole world out there that's trying to adopt Bitcoin and grow it, and there's a whole bunch of rules to that a lot of people aren't thinking about when they can just sort of stick up their hand and say, this is a bad thing. Just like he said to me, this is a bad idea.
Like, wait, let's peel this back. But
so we become friends over this, I think.
Yeah. we work through it pretty good. Yeah, I mean, I see that we're we're probably going to wrap this up. I mean, hopefully this was, I mean, at least a good, for folks that weren't really tracking the OFAC side there, or heard of any kind of compliance and censorship stuff. I know from my audience that follows on BBT, you know, they were asking a lot of questions like, what does this even matter? And a lot of the folks that follow us, or, you know, they mine everything from Ravencoin, Ethereum, ETC, all this other stuff. They're like, how does this affect us and that? And, you know, I look at it as a holistic cryptocurrency discussion. This just isn't Bitcoin, it's anything in the space. This is going to apply very heavily on DeFi. Like, we haven't even peeled back. Right now we're talking about just custodial and transaction processing. When you start talking about lending and all this other stuff, because you're lending to other folks, it's just addresses right now. We haven't even peeled that part back. So I always take kind of a pragmatic approach to that. So when people ask me, like, how do you think about DeFi on Bitcoin, it's going to be the same conversation. So I won't even talk Ethereum, I'll talk Bitcoin. Bitcoin is the DeFi market, the decentralized market. When we start talking about lending or wrapped Bitcoin on like a layer 2, it's going to be the same kind of thing when it comes to who are you lending to. Because if it's going to be, you know, DeFi, decentralized finance, you're just lending to an address, right? And at some point, is that giving somebody liquidity to do whatever, and how's that compliance going to work? And I know it's a large debate, and it's not to completely comply with you know, this old financial system. It needs to be reconciled. Well, if this is the new frontier, how does that reconcile from a standpoint of leadership, or, you know, government coming in and being able to stop, you know, some kind of, you know, terrorist financing, that sort of thing. And yeah, I think debates like this and just discussion and peeling back the mechanical piece of it first, to see, okay, well, here's how it works, and then look at, you know, where are these things going to operate? Is it going to operate in the U.S.? Do they want to touch it? We'll see, but I think this is the first start of it.
Yeah, I think it was a very useful conversation we had last night. And just to be clear, we just wanted to kind of depack our conversation. We're not saying anything's right or wrong. We're just sort of talking the mechanics, the thoughts behind it. Please don't attack us on Twitter. And there's other points of view on this. I mean, so we just, you know, we had that conversation. I thought it would be 5 minutes. It turned into an hour and a half. And we thought that, you know, as miners out there that are core to this process, we thought you'd like to hear kind of what happened and the things we're talking about. And again, it's not for or against. It's just a situation that's unfolding, and you know, the system will figure it out.
Yep. Cool. Hopefully we're good. All right. Yeah, thanks, guys.